Welcome. I'm Catherine Magana here with Rachel Ivanovich, Vince Stefano, and Greg Carroll, where we're here to provide you insights about the markets, investing, taxes, and much more. Today is July 16th, and here we are. We actually have the World Cup coming up, finals this weekend. I know there's been a lot of talk about it.
Yeah,
is.
Sunday.
Oh, it's Sunday?
So Argentina and Spain are the top two teams going to go play, and it's, there's been a lot of headlines about soccer these last
Argentina, the cardiac kids. They come from 1 down, 2 down, 3 down. Doesn't matter. They come back.
The other talk of the news this week is we are hosting our annual WWM barbecue for those that are here locally. Looking forward to doing a Western theme, so hopefully we'll get some pictures.
Vince is going to give us a
Yeah,
bull riding demonstration.
it was on the Joe Rogan
Oh, there you go.
podcast.
Don't miss it. Okay, so getting back to more important news. Okay, so it looks like recently inflation numbers came out for June. Inflation is at 3.5% in June versus 4.2% in May. However, core inflation, which measures how the prices across the economy, but it takes out excludes food and energy cost. Right now, the core inflation for June is at 2.6 versus core inflation in May. So once again, it's a little lower than it was last month, but I think that obviously had to do probably with some of the prices of gas and some other things that took place over in June. Looking at where we're at year to date with the markets, so over the last week, not a lot of movement in the Dow Jones. So the Dow Jones were up slightly. Year to date, we're at 9.56%. The biggest mover I think I've seen this last week is in the Nasdaq. It's up about 1.7%. So year to date, the Nasdaq's up a little over 13%. The S&P is up over 1% from last week. We're at about 10.62. And the Russell 2000 is up at 19.92%. So not a lot of change, but more in the positive territory still for year to date, looking at some of the different indexes that are out there.
There's a lot of movement underneath some of those indexes, though. Semis are up, 10%, and then, the software stocks are down 10, and then vice versa. A lot of movement in some of the hotter areas lately.
And then looking at where we're at with some of the interest rates, so the 1-year CD, not a lot of change. So we're at 4.15%. The 1-year T-bill Treasury is at 4.11%, and the 10-year Treasury is at 4.58%. So we haven't seen too much movement over the last week with some of those. And then looking at where we're at with mortgage rates, so that's had a little bit of a change since last week. So as of this morning, the 30-year is at 6.62%, and the 15-year is at 6.01%. So it's teetered over 6% for the first time in a long time. So once again, not a lot of headlines, but like you said, there's definitely some market movement going on.
We haven't talked about energy in a while, have we? Nuclear stuff. We used to talk about those SMRs, the small modular reactors, were really a hot dot last year. They kind of went parabolic and then fell off a cliff in the fourth quarter. So I was just reading some stuff on, nuclear reactors, because it is the cleanest form of fuel that we can produce at this point. You know where the first nuclear reactor was built and connected to the grid? What country? Anybody? Russia. 1954.
Really?
Yeah.
Okay.
There you go.
And by 1960, there was 17 reactors in 4 different countries.
Germany.
Germany I'm sure was in there. And by 70, there was 90 reactors in 15 countries. And then the 70s, actually, the reactors took off big time. There was they were building 25 to 30 new ones, or at least starting them per year, until 1979. When 3 Mile Island kind of started to melt down a little bit.
And then you had Chernobyl, which melted down.
Right. But, we stopped building them in 1979. When did we start building them again? When was the next one? Over 30 years later, 2012.
Wow.
It's a long time.
Where did they start building it?
I'm not sure which one was the first one back in 2012, but, the rest of the world kept building them. I mean, there was 253 back in the 80s. There's 415 today in 31 countries, and we haven't, we've built like one We have one under construction right now. One. China's building them like crazy. But who leads in production of nuclear power? What country? Another quiz here. Almost double the second place. U.S. still leads in nuclear power production.
Wow.
Double what China is. France is just slightly behind them, and then Russia. So, we produce about 18% of our power from nuclear. I didn't realize it was that high. China's only at 4.5%. But like I said, they're building. They have 35 new ones under construction today. We have one. They're going to double and probably catch up to us in the next 15 years unless we start building some more. But we do have at least 3 older facilities getting restarted, with the one new project up in Michigan trying to get going there. So in the next 5 or 6 years, there are a number of proposals for new places or new facilities, but we're just going to have to wait and see how that gets through all the red tape. Yeah.
I didn't know that.
But I think
interesting trivia.
Yeah, the power companies are under a lot of pressure to start producing more power, and so I think the pressure is there to maybe lighten up on some of the regulations, and we'll be seeing. I'm sure our technology is much better than it was, 40, 50 years ago. So I think we'll see them.
Well, I would sure like to see the small nuclear companies start rebounding.
Didn't one just go public today? And I think they lowered the price like half.
Sure, they lowered the price.
Yeah, anyway, but yeah, I think there's still a lot of growth there in the future. So,
well, anyway, this week, what did we see? We saw Q earnings reports come out from a lot of the major financial institutions. We saw top-line revenue and bottom-line EPS exceed consensus. Most of these companies also, kind of guided better for the year. And, a lot of that was the result of 2 things, investment banking and institutional trading, which makes a lot of sense because we've seen a huge number of IPOs come to the market recently. And the volatility we've seen in the market leads to a lot of trading. The problem is a lot of this has had they've been like, one-day effect. They were up huge on the day of earnings, and then they've sold off pretty aggressively the next day. So, I think the market right now is at the point where it's trying to understand and digest, as, Catherine had mentioned, the ongoing Iran crisis, the increase in energy prices, the continued database expansion, and how, inflation, and what's the Fed going to do about inflation?
They're not going to tell us.
And what's interesting is when you look at overall inflation, and it was interesting because I didn't hear this yesterday, but, I did hear this today after I wrote this. One of the big contributors right now to the inflation picture is the huge amount of spend that's going on in database build-out. And, companies are spending a huge amount of money competing for AI dominance. And this incredible spend in capital expenditures is causing supply shortages. And so what's happening, the building costs are going up anywhere between 25 and 35%. Wow. So those costs are having a huge effect on the underlying aspect of inflation. So it's not just energy, but it's also those incremental numbers. And the outlook of that is what the market has been trying to digest. And currently, the big question is, the spending profitability and when these companies are going to see some profitability from the CapEx spend. Now, what's interesting on this, and I'm going to just mention this because we can talk about this if anybody wants to, I think the market and the investors have to focus a little more long term, because what will happen is once these databases eventually get built out, capital expenditures are going to go down, and that's going to help revenue and bottom line.
But it's going to affect all those industries were building.
It's going to affect the building industries. But once these companies begin to utilize the technology that's provided by the databases, you should see an increase in productivity. And higher productivity leads to a decrease in inflation because what it does, it lowers the cost of producing goods and services. Now, you mentioned jobs, but jobs can also be, moving from one industry to another. So
Sure.
I'm not sure what's going to happen, but I think the productivity from these databases is going to have a huge downward pressure on inflation. And Kevin Warsh, the Fed chair, talked about it yesterday. And he had mentioned in the Senate hearing that he thinks that these databases can have a declining inflationary pressure. So again, I think the market's kind of trying to digest all this, and that's why you're seeing the increased volatility in the semis. You're seeing it in some of the other technology companies. But the good thing is next week we've got the industrials reporting, and the week after that, the week of the 27th, is when you start seeing big tech reports. So you'll probably start hearing some information on some of the AI build-out. So anyway, I'm still very positive on where this is going to go long term. You just have to be a little more patient.
What do you think about the new Fed chair, Warsh?
Well, he's still in his infancy, but I think he's pretty good.
He's done a lot of work in 6 weeks.
I think he's pretty proactive and he's communicated. It sounds like he's
and he's got all these subcommittees trying to really take a look and dissect how the Fed actually operates and works, and maybe there's some ways to make it more efficient, and maybe it seems like the Fed acts in a lag a lot of times. So it's going to be interesting.
Well, he did come out of the investment business, so he understands how markets react to the Fed, and I think
he was on the Fed 15 years ago.
Yeah, and then he went and ran a big hedge fund for a long time. So
made a lot of money.
I think he understands how Wall Street reacts to the Fed and how markets react and stocks, and I think I think what he is going to do is he's going to look at the mandates of keeping inflation low and job creation. I mean that's the two mandates of the Fed.
It just seems like a whole new, fresh look at
I like
things.
him. I think he's good. So
I
we'll
like
see.
it. Yep.
So for the July meeting coming up, there's the probability of no change. We're at about 88.8%. So unless something dramatically changes, but we're looking like there's no change. And then year to date, for looking if there's going to be a rate increase between now and the end of the year, there's an 80% probability. But once again, alluding to what Vince is talking about, that may change over time depending on what happens.
80% of a hike.
80%
for
a hike?
Of a hike.
Yeah, interest rate hike.
Well, that would make sense if they want to keep inflation down, get inflation down to 2%. What did you say inflation? It was at 2.5?
So where there's inflation came in at 3.5% in June, but that's regular, and then core inflation is at 2.6. So that's. But once again, it was nice to see it. I mean, it was at 4.28 or 4.2 in May, so that was kind of a pretty big change, I think, from May to June. But I think that had to do.
A lot of it was energy prices.
Yeah, we'll see what happens
gas.
with energy since the shooting started again.
Yep.
Every day, every week's a new week. We'll see. All right, so what's going on with the tax world, Rachel?
I'm seeing two trends right now. One is people moving out of state, leaving California, and then Trump accounts. So
Trump accounts are all over the news.
They really are. So apparently, as of June 4th, nearly 6 million elections were made to open a Trump account. At least that's what IRS has said they've received so far. But
that's a lot.
So what's interesting about the Trump accounts is the individual annual contribution limit for a Trump account is $5,000, and so most people would think, okay, it falls under the annual exclusion for the gift tax, which is $19,000, so I don't have to do anything. But apparently there was an issue there, and so the IRS and the Treasury Department had to come up with new guidance. And I think it was a private letter ruling that they came up with, which basically gives a gift tax safe harbor so when you give money to a child under age 18, it could be considered what they call a futures interest gift because they don't get the money until they're 18. So what this would have then triggered is a requirement to file a gift tax return, and which would have created a massive administrative burden for taxpayers and, of course, the IRS. So thankfully, they came up with this private letter ruling, and so you don't have to file a gift tax return if you give money to someone's Trump account. But I think this is important for a couple of reasons, because since they're treated as present interest gifts that fall under the annual exclusion, it doesn't chip away at your lifetime, your 15 million lifetime gift and estate tax exemption, which spares family from having to track this
Thank goodness,
into the
because
future.
I want the whole 15 million
Yes, exactly.
to be able to pass.
So, one way to open one of these accounts is if you haven't filed your tax return, let's say it's on extension, and you have you had a grandbaby, and you want to open one, you can file it when you file your taxes. So, the other thing that I thought was interesting is a lot of people are moving out of state, but because they don't want to sell their house, they're renting their house out. And so just keep in mind Section 121, which allows you to exclude $250,000 per spouse. You can rent your house for 3 years and still qualify for Section 121. But you would have to recapture whatever depreciation you were allowed or deducted.
Yeah. I've got a question if you're done with that.
I was just going to say, people often ask me, clients ask me, what are the best states to retire to tax-wise? And so that kind of depends, but among the top are Florida, Nevada, Wyoming, and South Dakota. And the reason being is, so Florida, there's no state income tax or estate or inheritance tax. The property taxes are pretty moderate, but insurance is out of control.
Yeah.
I say, and then let's talk to people that live in Florida in the summertime.
Right? Yes, exactly.
It's a little muggy.
Or during
energy-
hurricane season.
Exactly. Tennessee, no income tax on retirement distributions or Social Security, and low property taxes, but it really has one of the highest combined state and local sales tax.
Oh, wow.
So you got to keep that in mind. Wyoming consistently ranks among the lowest overall tax burdens in the country. No income or estate or inheritance tax, and has very low property tax rates nationwide.
Where do they get their money?
I don't know.
Tourists through Yellowstone.
Maybe.
I have a question for you.
Sure.
If you rent your house
Yes.
and you move to one of these more favorable tax states,
Yes.
do you still have to file in California?
Yes.
Oh, you do.
California wants their
So
money.
it doesn't matter.
So you file as a non-resident once you've left, and you only pay tax on California's source income.
So I mean your rent.
So your rent, but in California, if you've got a mortgage and the property value is pretty high, so between mortgage, property taxes, repairs and maintenance, manager fees, and depreciation, you're probably at a zero or a loss. At least that's what I see.
So you're saying it's better just to sell your house and move
Not
out of the
necessarily.
state?
Not
Not for a few
necessarily.
years
Not
anyways.
for a few
Not for
years.
3,
I
no.
mean, I would say what I've seen, the issue is that people decide, oh, I'm getting out of here, and they sell the house, and then they can't come back. So if they move, let's say they move to Tennessee, and then they decide, oh, I really don't like it here, then you can't come
Grass
back.
is not greener.
You can't come back to a house that you sold. So
Right.
if you rent it for a couple of years, and just know that clock's ticking 3 years, and then after that, you can't use the Section 121 exclusion on that home.
I've got a question on the Trump accounts.
Okay.
If we want to jump back to that.
Hopefully I have the answer.
Well, yeah, I don't know. There's a lot of wealthy billionaires giving a lot of money to these. Michael Dell just gave like $6 billion. Who gets that money? Where's it going? I don't know. They're donating money to the Trump accounts, but I don't know what Trump accounts are getting
That's
this.
interesting.
Yeah.
I'll have to research that.
Yeah, there's a number of wealthy individuals that are doing that.
Interesting. Oh,
Yeah.
maybe it has to do with the seed money that was being given out, the $1,000 to the
$1,000.
newborn
Maybe,
children.
yeah.
So you can open up a Trump account if you have a teenager. And the benefit to that, of course, is if you want to open up an IRA, a traditional IRA or a Roth for your teenager, they have to have wages, they have to have earned income. But with the Trump account, you can put the money in, it can grow tax deferred.
So they don't need earned income.
But they don't need earned income. But the seed money, the $1,000, is only for children who are born in 25 through, I think, 28.
I think so,
maybe
yeah.
that's where it's going.
Yeah,
I'm
interesting.
assuming seed money.
Yeah.
So you mentioned having conversations with clients, and I've had a conversation this past week, and actually, as I reflect back, I've had multiple conversations over several years, and I met with a client that's in her late 70s, and we were having the conversation about should she downsize, should she move to a retirement community, should she move out of state, and she's really kind of thinking about what's next in her life. And once again, she's in her late 70s. She's feeling healthy, but we had the conversation of, well, what do you want? And so we're going to look at it financially, what the options are for her. And then she can also decide and know financially, but also behaviorally, because everybody's different. Some people think, okay, I want to move to this retirement community where there's different levels of care. But then when they really take a step back, they're like, well, do I really want that? I don't. And then so there's that kind of divide of, what does your future look like? And I said, well, let's have these conversations. Let's look at the numbers. Let's look at your plan. You have options. However, at the end of the day, be proactive and let's look at everything instead of your family making those decisions for you later. And so once again, there are instances where if you're in your home, you can have in-home care and there's different things and you may not need it now, but I think being proactive in these conversations, and they're very tough conversations to have, but I think looking at it and having that peace of mind that, okay, I at least looked at everything, that's what we're here for, is to have those conversations and look at the numbers and make sure that it works for you and what your wishes are. Another conversation I had this week, which we've shared multiple times, is just want to make sure that you are reviewing your IRA beneficiaries, your primary and contingent. Once again, there are different benefits of having your spouse as the primary versus a trust or potentially your contingent individual beneficiaries instead of the trust. But once again, that's case by case, and you have to talk to your estate planning attorney. But we're happy to have those conversations with you and kind of lay out what you're doing and what we think is best, because that's something that I think does need to get revisited over time. And so we're happy to continue those conversations.
It's surprising how many times that comes up as beneficiaries. You're like, oh yeah, someone died, or a lot of life-changing events, and it doesn't hurt to check it every year.
Well, and with the Secure Act of 2.0 that came out several years ago, then that kind of changed things for the non-spouse beneficiaries and taking money out over 10 years. And so the rules kind of changed a little bit, so where things might have been in place, you might want to revisit.
Right.
So we covered a lot of ground today.
We missed something.
Fear and greed.
Where is it?
There we go.
Thinking alike.
Sorry. Okay, so as of this morning, we're at 48, which is neutral. So we've been the last few weeks at neutral, but earlier this month in July, we were at fear. But I think with the markets kind of coming back a little bit, we're at neutral right now. So
Well, I think it stays at neutral when there's just so much confusion.
Right.
And there's a lot of confusion. But, it's going to be interesting is the week of the 27th when big cap tech starts to report. And, I've been talking about it in a lot of these podcasts, is that the companies are saying that, they're going to start monetizing some of these AI investments later on this year, on into next year. And so I think you're going to start hearing more and more of the monetization. And I think that's going to really help the market kind of figure out where this whole AI investment theme is going. And I'll be honest, I think it's going to be a huge winner over the next couple of years. So, don't give up on your names because, like Rachel said, if you sell your house, you can't get back into it. If you sell at the wrong time with some of these tech names, it's tough to get back in.
And so here we are, the middle of July. Once again, we talked about looking at mid-year if you want to do any reviews. Our quarterly reports also just went out as well. So happy to go over your plans or investments as we're kind of, this year is just flying by. So thanks for listening, and we'll see you next week.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.